I want to start this video by looking at this data point, and what you note is big four companies of US. For example, Amazon in 2025, their capex guidance was around $125 billion. Look at Microsoft, $80 to $120 billion. Google, $91 billion. Meta, $70 to $70 billion. Also, very recently, some of these companies announced investments in India. For example, Amazon, Microsoft and Google, they announced around $67 billion of investments in India, primarily in AI and data centers. Now, there are a lot of questions that comes into my mind. For example, these companies, are they actually making some money? Are they actually generating some profits? Are these companies actually creating some cash, or are they burning cash? And where are these companies investing their money? There are a lot of questions. So in this video, what I'm going to do is I'm going to give you deep insights about Google. And if time permits, we're going to also compare Google and Amazon. I'm going to present to you some mind-blowing data and fact that you won't find anywhere on YouTube. If you don't know me, my name is Rahul Jain. I'm a SEBI registered research analyst. I do my independent research and share it on my channel. If you're new to my channel, don't yet subscribe. Watch this content for a few minutes. And if you're learning something new, if you're gaining some new perspective, then become a lifelong subscriber of my channel. With that, let's get this video cracking. Let's start from very basics. How much money Google makes and where is this money coming from? I'm going to present to you some mind-boggling data. Have a look at my screen and you will see that in 2025, so this is 2025 bar, around $385 billion of revenue is anticipated by Google. And more importantly, if you look at the yellow line here, which is the profit margins, you will see that around 32% of profit margin is what Google is likely to generate. Since the Q4 2025 results have not come out, this is sort of anticipated 32%. And if you go back to last 5 years of history, this is highest ever revenue. It is highest ever profit margin that Google is generating. Also, if I show you previous data in terms of the growth rate of Google's top line, okay, have a look at my screen and you will see that in 22 and 23, these 2 years, Google's top line grew in single digits, almost high single digits, 9.78, 8.68. Barring these 2 years, if you look at all other years, 2024, 2021, 2019, 18, 17, 16, almost every single year, the top line of Google has grown at more than around 15%, right? Look at this data. Even if you go back to 2012, very healthy growth rate in top line is what Google has produced in the last 10 to 15 years. So this is how much money Google is generating every single year. But more important question is, where is this money coming from? What are the business segments? Because if you understand the business segments, you understand tomorrow if any risk plays out for Google, you know which business segment is growing faster than others. That's the sort of core analysis we need. So what I've done is I've gone to Google's earnings presentations and I have taken their Q3 25 number. So what you see is in Q3 25, they did around $102 billion of revenue, which is the top line. I'm going to present to you now the breakdown of this and walk you through Google's business segments. So what you see on my screen is, first of all, the broad breakdown. Okay, so Google reports their revenues into two service segments. Number one is Google Services. I'll talk about that in a minute. But in Q3 of 2025, around $87 billion came from this services segment, while the second segment is called Google Cloud segment. Here, the revenue was around $15 billion. Okay, now what's the further breakdown of this Google Services and Google Cloud? What does it actually mean? Are there any risks here? Let me present to you further data. So this slide that you see is all about Google Services revenue. Okay, so $87 billion that I showed you, that's the number here. And if you look at this, there are 4 sub-segments inside it. Number one is Google Search and Other. That is their primary business. Around $56 billion came from Google Search and Others. Now, just to make it very clear and easy for you, for example, when you go to Google and let's say you're searching for a hat, what are you going to see? You're going to see a bunch of links coming here. Majority of these links are promotional links. These are called performance marketing. These are called brand marketing. If you click on these links and if you end up purchasing, then essentially Google is somewhere getting a cut out of your purchase, right? This is called Google search. So whenever you're using Google search and if you're doing any shopping, please be aware that Google is getting paid from that search. The second big business segment that you see is subscriptions, platforms and devices, around $12 billion, which is the second largest within the Google services. This is all about, let's say for example, if you've signed up for YouTube Premium, if you've signed up for apps on Google Play, there are various other platforms and services through which subscription amount is what Google is charging, and that is at around $12 billion. And also look side by side the growth rate. Google search grew by around 15% year on year in Q3. Very, very healthy growth rate, and I'll come to that in a minute. But if you look at subscriptions, platform services, 21% of growth year on year. Third one, if you look YouTube ads. So whenever you go on YouTube, you see some YouTube ads going on. That is around $10 billion, around 15% of growth rate. The fourth segment, the smallest segment, is Google Network. What is Google Network? I'll explain to you in a minute, but it's around $7.3 billion. That is also adding into the revenues. Now, what is Google Network? So for example, if you're browsing, let's say money control website, what you see here on the right, there is an advertisement coming up. This advertisement is what is Google advertisement, and Google is charging the advertiser, and you are seeing the ad, and that's how Google is making money. So Google Network essentially means any websites, any other platforms where Google is delivering those ads, that's where they are getting money back from. Now, one of the big problem or risk that investors feels about Google's search business, which is $56 billion, which is the largest chunk, is that is this Google search going to sustain, given the fact that now AI tools are coming up, right? ChatGPT is there, of course, right? Gemini, which is Google's AI platform, that is also out there. One of the biggest concern is that will people actually search on Google if they've got the AI platforms or AI tools? And here is some data point that you need to know. I was reading their earnings presentation, and what their management was saying is that they are enhancing their Google search with the AI capabilities. For example, AI Max is what they've implemented, and using that, one of their customers called Kayak, which is for the holiday bookings, actually generated far better return on ad spends, ROAS, which is around 12% in early test. So it's not that this search will die down. In my view, this search will get enhanced by AI capabilities. And again, it's very hard to predict future, but right now, what I am reading from their management commentary is that more and more client would use AI-driven search rather than the plain Google search. So I don't think there is an immediate threat to that particular business segment. So this was all about their $87 billion of services business. The second one is Google Cloud, which is around $15 billion. Now, if you look at Google Cloud revenues, right, $15 billion, the growth rate here is much higher than the Google services business. So how much is the growth here? 34% almost. That is a very, very good growth rate as compared to their Google services business. Now, what is this Google Cloud business segment? So primarily Google offers cloud and AI related solutions to businesses. So it's a B2B business, and they have a lot of offerings within this particular segment. So for example, if I talk about some of the examples here, their management talked about there are total 13 product lines, right? For example, there are AI accelerators, and there are a lot of things inside this Google Cloud business segment. And each one of these product line is generating an annual revenue of around $1 billion, right? That's why they are around $15 billion of revenue as of now per quarter. Now, if you look at the Google Cloud platform customers, which is GCP customers, here their number of new customers have grown at around 34% year on year basis. So they're seeing good traction in this particular business segment. And Sundar Pichai, their CEO and director, actually made a comment in their earnings presentation that the company is sitting on a backlog of around $155 billion within the Google Cloud space, which is almost, I would say, 10 times of the current revenues quarterly that particular business segment is generating. So seems like there's a lot of traction in the Google Cloud services. Now, we don't know whether these businesses will continue to invest in AI or not, because if they stop investing in AI, then Google's cloud business may suffer. But if the AI spending continue to be there around the globe, then Google's cloud business will continue to grow. As of now, the indications are that it is growing at a very, very healthy growth rate. So this was all about how much money Google is making and where is this money actually coming from. Now, let me talk about how much of profit Google is making. So in Q3, if you look at the profit margins, it were around 35%. Out of this $102 billion, around $34 billion of profits, net profits is what the company reported. So 33% of net profit margin is a very, very huge margin in my view. But even more important data point that you need to see is that how much of this was cash component. So out of $102 billion, if I show you this data here, in Q3 2025, they generated $48 billion of cash, operating cash. This is operating cash number. So this is the net profit. And I hope you understand the basic P&L reading that this is not the cash component, $34 billion, because there is a lot of things here in terms of, depreciation, amortization. A lot of things might be there, which is not cash related components. But if you look at the operating cash, it generated around $48 billion of cash. Now comes the question that how much of money Google is investing in capex. Because if you invest a lot of money in capex, then your operational cash flow will come down and it will convert into net cash flow. So if I show you the data here, have a look at the capital expenditure data published by Google itself. In Q3, they invested around $23 billion of capex, and this capex has been growing, as you can see in the slides here. Every quarter, they're spending more and more money. Now, how much of this money is going in AI related spends? That I do not have the visibility, and that is where one of the concerns of investors is that is this spend going into AI without getting any returns? We don't know that. But since the company is generating huge operational cash, it's all been coming from the operational cash. And therefore, if I look at the free cash flow of the company, even though the company is putting a lot of money in capex, they still have positive free cash flow. And if you look at the data here, the positive free cash flow in Q3 was around $24 billion. Q2 was very bad, only $5 billion. But in Q3, they have delivered very, very high free cash flow, $24 billion. So it's not that the company is not making money. Company is definitely making money. All the segments of the company, as we saw, is definitely growing at around 15%. In fact, Google Cloud was growing at around 35% as we saw the data. Company is generating operational cash flow positive that we saw. And even though the company is putting a lot of capex, company is still ultimately generating free cash flow, which I showed you the data here, which is around $24 billion as of Q3 2025. Let me also quickly give you examples of Google's investment in other companies and ventures. For example, SpaceX, which is owned by Elon Musk. And here the company invested back in 2015. And the news has it that Google and Fidelity had participated in the $1 billion financing round back in 2015. And their total stakes must be around 10% at the time, right? Now you might have heard in the news that SpaceX next year in 2026 might be coming out for listing, and if it gets listed at around valuation of around $800 billion, then Google's paper gains will be around between $40 billion to $60 billion. This is just one company, right? Second one, for example, Google's Waymo, which is the self-driving cars, that is also looking to raise more funds, around $15 billion, and that's going to be valued at around $110 billion. Right? Now, this is a lot of money for Google that it is going to reap if the valuations hit that much. Third example is Anthropic. So Google owns around 14% in Anthropic, which is another AI company. And on paper, the stake is being around $25 billion as of now. Now, these are only three examples I've talked about. Again, I have not gone through each and every investment that the Google has made in the past, but seems like they might be sitting on billions of dollars of investments that they might have done in the past, because the company has been generating a lot of operational cash flow, as we saw in a lot of years. Therefore, that is also showing good, solid balance sheet in my view. So overall, if you look at Google as a business, it is looking stronger than ever. However, of course, there are a lot of risks with Google. What are the two big risks that you can think about? See, number one risk is that they are putting a lot of money into AI infrastructure. And if the AI theme, for whatever reason, slows down, and it could happen, right? It could happen in 2026, it could happen in 2027, that if the AI spending slows down, they would have built this massive AI infrastructure. Google has invested already, right? And due to which they might not be able to get the returns back. And that might cause difficulty in their P&L, because there will be depreciation coming into P&L, their profits might come down, etc. That is a very, very good real risk that you need to be aware of. Now, whether this will happen or not, we don't know. You don't know, I don't know, right? But we just need to consider that as a risk. Second one is, for example, regulatory risk. For example, now in September 2025, a ruling came that stopped Google to pay to devices to make Google as a default browser. Again, these things could change overnight. Okay. And therefore, every business has a risk. Google has those risks. So these are the two big risks from an operational perspective, from a spending perspective. But more than that, the valuation risks always remains with Google. Why do I say that? If you look at my data and if you look at a lot of valuation metrics here on the left side, okay, be it P ratios, EV multiples, price to sales, price to book, what you note is that if you look at the 5-year average, now again, you could argue that 5-year average is not the right comparison because at 5 years back, Google was not growing at this rate. But you know what, we still have to consider it as a risk. If you look at 5-year average PE ratio, for example, trailing 12 month, if you look at it, it is at around 25, but current PE is at around 31. If you look at forward has been around 23. Right now it is at 29. If you look at EV multiples, trailing 12 months, average 5-year has been around 18. It is at around 25.83. If you look at forward EV multiples, 21 versus 5-year average 13. If you look at price to book, trailing 12 month, as of now 9.84, but 5-year average has been 6.68. Price to book forward is 9.49 and 5-year average has been 6.14. If you look at any of these valuation metrics, you definitely would look at 5-year average and the current one, you would find that there is a mismatch. Okay. So that of course valuation risk always remains with Google. Therefore, you need to be aware of that particular risk as well. So I've gone into a lot of details about Google, about their business segments, about their cash flows, about their valuations. Hope so far you enjoyed this. And if you have, hit the like button. Let me know in the comments a simple thank you. It motivates me to do some research for you and bring to you some presentable data at very easy explanation. If you're interested to learn about, let's say, Meta, Microsoft, Nvidia, let me know in the comments. I'll try and make videos for you which are deep dive analysis, but I really need to know whether you're enjoying this content or not. So hit the like button. Let me know in the comments, thank you, so that I know that you're liking this type of content and I'll create more deep dive analysis for big companies in US as well as in India. Also for exclusive content, you can consider joining my YouTube community. The feedback of this community has been excellent. I'm posting almost on a daily basis. You're going to learn a lot. So go to my channel, click on the join button and be my guest. With that, in the last couple of minutes, let me also give a comparison of Google versus Amazon so that you understand a lot of differences between these two companies. So first of all, if you talk about the revenues, trailing 12 month, Google around $385 billion, Amazon's very high, $691 billion. But if I talk about the net profit, so for example, net income here is, so Google is around $124 billion while Amazon is much lower, only at around $76 billion, meaning that Google's margins are much higher, as you can see here. For example, net income margin, Google enjoys around 32%, while Amazon is only at 11%. So Amazon is generating higher revenues, but because the margins are low for Amazon, Google is generating more profits. That's how you need to read it. Also, if I talk about, for example, return on equity, return on assets, Google is generating much higher return on equity and assets because of higher margins, as you can see here. Next, in terms of the balance sheet, if I talk about the total cash position here, Google is sitting at around $98 billion, while Amazon $94 billion. But Google has debt of around $44 billion, which makes it a debt-free company. Their net debt position is minus $54 billion, while in case of Amazon, they're sitting at around $160 billion of debt, which is higher than their cash. Therefore, they have total net debt of around $66 billion. So their total debt to equity is around 0.43. When it comes to cash flows, which company is generating better cash flows? So Google clearly is generating better operational cash flow, $151 billion in trailing 12 months, while Amazon is at around 130. But if you look at the free cash flow, Google is generating at around $48 billion, while Amazon $26 billion, because Amazon is doing a lot of capital expenditure, which is more than the Google. As you can see here, $120 billion of capex in last 12 months versus Google, which did only around $77 billion. So that's why if you see, Google is driving the profitability while Amazon is higher in terms of the revenues. And if you look at the valuations now, for example, if you look at the simple PE ratio, forward as well as trailing 12 month, actually Amazon's PE ratio right now is on the higher side as compared to Google, but remaining factors, for example, EV multiples, Google is much more overvalued as compared to Amazon. If you look at price book, which is trailing 12 month or forward, Google is sitting at higher values at around 9.84, 9.49 versus Amazon, which is at around 6.7 to 6.46. So as compared to Google, Amazon is slightly lower valued, right? As of now, as if I can see EV multiples and price to book, but from an earnings perspective, they are almost close to each other. So in this video, I've given you a lot of details. Let me know in the comments any other videos you would like me to create. I'm happy to bring some data perspective to your research as well. None of these are recommendations, of course, for investment purposes. Please do your own research. And if you enjoyed this video, like the video, let me know in the comments a simple thank you. And also subscribe to this channel. I'm going to see you in my next video. Until then, keep rocking.